Greetings to fellow traders. This is Rajoo here from Precise Trader. I welcome you back again on this topic on taking full advantage of precise trading zones. I believe everyone can see my screen and can hear me clearly because please do take note that because I'm having multiple screens, so sometimes what happens is sometimes I may forget to switch the screens. So I suggest if you're not able to see the screen, then probably you can just highlight to me. Okay, do take note that for those people who are coming first time, I hope you can see my screen. Okay, first time, do take note of the risk disclosure. Okay, this is going to be purely education, and you can learn because you see this is the system which we have developed over the years, right? In fact, we were working on this system, on the trading system for the last, I would say easily say about 15 years, meaning in the sense we have invented a system, and what we have been doing is, we have been trying to improve on the system, fine tuning it so that, traders can use it with ease, to trade with ease in the long run. Okay, trading is a game. Okay, I hope I do not know how many of you agree with me. You see, you must treat trading as one of the sports. Okay, what do I mean by that? You must enjoy it. Meaning in the sense like, when you take a trade, you should know the risk together with, of course, your rewards, and you should know what you're doing. When you are aware of that, trading becomes easy. All right. And also, you should accept the fact, okay, the faster you admit your mistake, okay, because see, it's all about your resistance, meaning in the sense, most people, they tend to lose money because they're being very adamant and they're not prepared to accept their mistakes, and basically what they do is they challenge the market, okay, meaning in the sense that, okay, I'm right, the market should be coming into this in my directions, and that's how most of them tend to lose money. You should accept the fact that it's all about like the market is always right? So either whether you're right or wrong, that's what makes the difference, right? And what we have done is, okay, we have been developed a system, and basically that's where did anyone? How many of you are coming first time? Who are first time? Please just tell me first, at least, try to answer my questions, ASAP, so that I don't have to wait for you to respond, all right? For those of you who are coming first timers or coming first time, what I would suggest is probably you may get confused because end of the day is, it's a number game which we are going to play, all right? And it's all about your trading decisions, all right? So you have to see whether, of course, it may look complex, but when you learn how to use it, it can be used with ease. I'm sure, you are having a system, you have worked on the system, and you have developed, definitely you have been looking at the system, right? So probably you can look at this then to see how we can trade with ease. Okay, for those of you who are coming first time, okay, what I would suggest is, do take note that, we focus all in all about 36 crosses. Okay, the crosses which are Euro, Pound, Dollar, Yen, Dollar, Swiss, Aussie, Lodi, Kiwi, Sing dollars, and any one of these crosses against each other. Okay, and what our system does is basically it helps us to pick, on the crosses which can be traded, during a particular time or during a particular time belt. Then you can stick to the trend most of the time, especially if you are able to identify whether this is a trading mode or not trading mode, right? So and also for those of you who wants to know how the system works, is okay, the theory behind our approach to the market. We use price level principle, or PLP in short, and basically we use Fibonacci average, which form moving averages, trend channels, Elliott waves, and Gantt numbers. Okay, basically why our system works, or why the system is able to do it with great accuracy is because we use all these tools in deriving this set of numbers or this set of tools, right? So basically, we use it. That means we have more or less we have prepared or done the work for you, to just you use the system and just follow the rules and you will be doing fine, right? Okay, what I'm going to do is, what I will do, I'll show you one example. Okay, how would I trade? Okay, how would I trade, or how would our clients take their trading decisions, day to day? Let me change the screen. Okay, before I do that, this is something which I always keep highlighting. For those of you who are day traders, what I would suggest is, try to look at the announcement, the important data announcement, especially being a day trader. Okay, for those of you who are day traders, we have to be very precise in our entry, right? We have to be very precise in our entry. We have to take our decisions, very accurate, because either you're right or wrong, and there's no second thought about it, right? So looking at this, I think we have two important announcement. In fact, we have ECB rate decision, which is to be out, at 12:45, and we also have, I think, the cable started to move, right? And there was some announcement, right now, and we also have BOE rate, interest rate announcement at 12 GMT. So basically, these are very important data. We have to make sure, or we have to ensure that we do not initiate, any trades during that time. Okay, during that time, you can of course, if you have a good opportunity for entry, probably you can enter a trade, and you may, if you want to fight for the news, you can fight for the news. But if you feel, if you're being very conservative, then I would suggest try not to hold any positions during the announcement or during that trade, right? Okay, right now, after doing this, what I do, or what our clients do, is basically we have an alert. Okay, whenever we get an alert, this is an alert that is telling us, the market is going to move, right? Do something, and we just take our trade or take an entry whenever the market starts to move. Okay, you remember, we must always stick to the direction of the trend. Okay, and of course, how would we know? It's basically, it's just an alert. What's the alert? The alert doesn't tell us whether to be a buyer or seller, right? Okay, now I think after the announcement, I think just now the cable started to move, and in fact, it is making a good move. Okay, now let's see how are we to take this trade, or how are we to use this opportunity for our entry, right? The next, after getting an alert, after I get an alert, what I do is I usually look for confirmation. Okay, in fact, we had an alert about 3 minutes ago, right? Pound broke the resistance zone 1. Okay, in fact, it broke the resistance zone 1. So the market the pound is making a move, after that announcement, right? So now, looking at this, I see pound all ones. Okay, basically, it tells me that this is the strongest cross that is to be traded right now, right? And this cross is, of course, I have to stick with that trend. But of course, we have to find out whether that move is going to be a genuine move or is going to be a false break. All right. Next, after confirming the strength, Okay, then next is on to my right is, you see, which would be the best cross to trade. In fact, pound kiwi, this is the best cross to trade right now, and pound yen is the second best cross to trade, and pound US is the third best cross to trade during this time. Okay, now at this moment, so I have to be in this trade, right? Next, of course, we have because you see all this, for those of you who are coming first time, okay, for those of you who are coming first time, okay, it may look a bit complex, but when you learn to use the system, the system can be very useful and very easy to use. It's very user friendly, right? And of course, we also do a trade preparation. Okay, in fact, this is something which we have. We also tell our clients to get prepared. Okay, I hope you can see the screen. In fact, we have highlighted this. Pound kiwi, which was best cross to trade, which we have already highlighted. That this is one of the cross to look at. We have a kiwi yen, and of course, we have to wait for the market to give us the signal. And you see, sometimes we can anticipate the move, but if the market, we have to wait for the market to give us the signals for us to see whether the move. Okay, now let's look at the market and see how can we trade. Okay, now let me look at this example. Let me show you. After I look at this, okay, what I do. Okay, now I've decided to trade on the pound, right? And what I have to do is, I have to see. Just give me 1 minute. Let me show you the report. What is the criteria you use to select which is the best cross to trade? Okay, later on I will explain to you, right? Okay, if you look at pound, in fact, the pound, this is the report which we publish twice a day, and basically this is the report that helps me to decide my entry, exit, and stop loss. Okay, and also do take note. See, being a day trader, okay, how many of you are day traders in this room? Because the day trader, as I told you, we have to be very precise in our entry. We have to be very precise in our exit, and we also have to be very precise in our stop loss. The moment, because you see, the difficult thing about being a day trader is, I hope you agree with me, because sometimes, if you have an early entry, probably your risk versus reward doesn't justify, and you may get stopped out. If you have a late entry, probably your price target is not justifiable to make your risk reward, price target, and sometimes you miss that opportunity. So that's what I'm trying to explain. This we have to be very precise in all these three entries. Okay, now I'm going to show you one example, and I'll teach you how I use the system, to take my trading decisions. Okay, I hope you take a piece of paper and write down all these numbers, because all you have to do is, it takes about less than a couple of minutes for you to decide, whether to be a buyer or seller, and where is going to be my entry, where is it going to be my exit, and where is going to be my price target. Okay, do take down. These are the quick information which we need to highlight. Okay, the weekly open is 156.95, and right now the market is trading at 157.65. That means the market is trading above the week open and below the month open. So basically, see, the reason why I want you to do this is because we follow a specific way of approaching the market. Okay, what do I mean by that? Is, we also call, early on, I said price level principle. There's another system which we apply. We call it an opening price principle. Okay, basically, what it means by that is, I use opening price as a gauge or a benchmark for my decision to see whether am I going to be a buyer or whether am I going to be a seller. That means, just a quick note. If the market is trading above the day open, definitely for the day, I have to look for a buy, because, as long as, the market has registered a day low, and the market is trading above the open, by rule of thumb, I have to be with the trend, and of course, I have to be on the buying side, maybe for the day, because, the market is in that direction, all right? If the market is trading above the weekly open, sometimes, the market may be trading below the week open and can be above the day open, so we know that the upside is going to be limited. I hope you can visualize what I'm trying to tell you. For first timers, not to worry. Maybe the next time when you come, I will explain in detail, how this can be done. So a quick rule of thumb, it's trading above the day open, above the week open, and below the month open. So basically 15855 is a very critical figure for me to take note. All right. Just quickly take note on the on this. I hope you write down all these numbers. So later on, we can decide where to enter, whether to be a buyer or seller. For a quick buy, or all this can be decided. Okay. Week open is 156.95, so it's trading. So definitely the market is bullish for the week. Month open is 158.55. That means overall is, the sentiment is still down. So I have to be, maybe the upside is limited as long as the price doesn't break above 158.55. Okay, these are the two levels. And of course the trend, it says, the hourly trend, it says sideways while 15815 holds. Okay, basically what it means is, as long as the price doesn't break 15815, the market is expected to be in a range, because the word sideways is telling me that it's in a range trading, so I have to be careful. So when you see the word sideways, that means it's basically, even sometimes the market can break, but it doesn't mean it's a genuine break. It can go up. Then, as long as that 15815 is not breached, it can have a pullback. So that can be a good opportunity, especially if you are a day trader, right? And on the other hand, daily, it says sideways down while 15960 holds. See, the best entry would be the price trading or take an entry near this level. That would be the least risk with the most rewarding opportunity, right? So write down these numbers: 15815, which is the key level for the hourly, and the daily is 15960, and of course the weekly, which is 15395, which is very far, so we don't have to bother about this. Quickly run through all these figures. Okay, the previous month, okay, we have 163, which is very far away. Current month high is 15880. Current week high is 15805. Okay, that means the market is trading above the weekly open, but it's trading below the week high. Try to get these figures and try to visualize how this things works, and how we can look at these figures, right? And the current week low, which is 15630, and the current month low is 15630 also. That means, in other words, the current week and the current month low registered on the same week. That means beginning of the week. So this is something which for us to take note. And the previous month low is 15675. So in other words, the market broke this month. The market broke the previous month low, and right now the market is trading at 15735. That means, it's telling me that the market, it can be a false break. Okay, of course, all these are clues that I get it from the market. By looking at all these figures, that I decide, or I look for clues how I can use or interpret in my trading decisions. So more overall, the picture I'm getting is the market is trading above the week. I just quickly summarize, right? Market is trading above the week open, below the month open, below the hourly trend, right? Below the daily trend, right? So overall, I'm still visualizing to see that, if the market goes high, then I can go for a short. Okay, that can be an opportunity, right? That's what I'm getting, or that's the visualization I'm getting from this analysis. Now, how do I make an entry? how do I make my exit and stop loss. Okay, do take note that the entry exit is always done, okay, at the zone 1 zone 2 levels. Okay, basically, what do I mean by that? That means I have 3 types of entry. Okay, basically buying at the valley, which means that buying at the lowest point, buying on pullback, which means that after the market has made a registered low, then when the market pulls back, then I go for a re-entry again, and of course buying on breakout. Okay, the third entry, which is the buying on breakout, okay, which is the most dangerous thing to do, especially if you are day traders. I wouldn't advise you unless you know what you're doing. Otherwise, you just apply this tool strategy, meaning in the sense buying on breakout or buying on pullback. Okay, what do I mean by that? Okay, take note of these figures. Okay, earlier on we recorded those levels. Now these are the levels I need you to record down. Another thing, what I want you to also do take note that is, please apply a variance of between 3 to 5 pips as a variance, because the market, you will, I can take a challenge, you would be surprised that the market moves precisely at the levels most of the time, because I told you earlier on that the tools we use to derive all these levels are Fibonacci, Gantt numbers, Elliott waves, moving averages, trend channels, so on and so forth. So the levels or zones are reliable at most of the time, right? So use a variance of between 3 to 5, especially if you're planning to put a stop. What I would suggest is we have to be very precise. And I did tell you earlier on that being a day trader, our precise entry, exit, and stop loss is imminent or is very needed, right? Okay, now support zone 2, which is 156 figure. I want you to write down all these figures, right? 156 figure. Support zone 1, which is 15625, and I have a previous day low, which is 15630. Okay, in other words, early on we saw the current week low, which just registered yesterday. Okay, so in other words, if the market is not going below this level, then I know that the market is making higher lows. Okay, that is the indication that I can go for a long or go for a buy. Okay, now, of course, the best entry point is, if I'm going to go for a buy, is I would want to go for a long near this level. That means near 15625 or 156 figure level. In fact, the today's low is 15630, okay, which is precisely at yesterday's low, and also I would say precisely at support zone 1. And do take note that this is also a rule of thumb which I use in my trading. The day low would usually happen within our zone 2 levels. Okay, in other words, that means if I'm going to expect the day low to be, if I'm going to expect the market to go up, then the day low would usually happen within the support zone 2 level. If I'm going to go for a buy, and on the other hand, if I'm going to go for a sell, the day high should happen within resistance zone 2. Okay, this is the rule of thumb which I always use in my trading decisions to decide, to see whether that is the check. I also used to do to check whether that also applies, right? Okay, now we have support zone 1 and support zone 2, which is 15625 and 156. Okay, write down these figures. And we have a resistance zone 1 and resistance zone 2, which is 15695 and 15720. These are the two levels for me to take note. Remember, I said 3 types of entries or strategies which I use is buying on the lowest point, which is near this level, which is if I'm going to go on buying on the valley. If I'm going to go for a buy on breakout, that means I use a second type break of 15720, then this is considered as a breakout trade. And anywhere between these two levels, okay, 15625 and 15695, then I call it a buy on pullback, right? So these are the three types of entries I'm going to do, right? Next, where do I book my profit? If I'm going to go on, if I'm going to be a conservative trader, then I would like to look for a buy. And remember, the market is sideways, so I would want to book my profit before the price cleared zone 1 or zone 2. Remember, I said that the day high would always happen within the zone 2. So in other words, if I'm going to call myself a conservative trader, then I would want to book my profit before it clears zone 1. Okay, this is strategy 1. I'm going to strategy A, which I'm going to apply. The second entry is, if I missed or if I can't get my entry near this level, then anywhere, probably I may want to buy at 156, 40, 50 level. Then I may want to exit before this level. That is the second entry. And of course, if I'm going to call myself an aggressive trader, then I would want to have a second time breakout of 157.20 level, right? 20 plus minus between 3 to 5 pips. Okay, now, how do, the question is, can you explain the entry again? Okay, remember, the entry is always decided at zone 1 and zone 2 levels. When I say zone 1 and zone 2, that means it can be resistance zone 1 or resistance zone 2, it can be support zone 1 or support zone 2. This is my entry. The entry depends on, if I'm going to go for buying at the lowest point, then I buy at support zone 1 or support zone 2. If I'm going to go for a buy or pullback, then I look to buy anywhere in between, which I call it a no man's zone area, which is between 156.25 and 156.95. That means we have about 70 pips difference. And also do take note that whenever the price moves within the zone, no man's zone area, usually, okay, most of the time you do or you get a choppy session. Okay, this is also one of the characteristics of the market. You look for a choppy trading. Whenever the market is caught within that area. All right. I'll show you. Later on we will look at the chart. We will look at the chart and see how well the market responded to our call and how well this market was showing to our calls, right? Okay, now I've more or less told my entry. Where do I book my profit? If I'm going to call my conservative trader, then I told you I want to exit before 156.95, which is that's a conservative trader, or before 157.20. That means I put my entry exit at 157.15, which is about 3 to 5 pips variance, right? Of course, if I feel, if I want to fight it out, and I'm aggressive trader, then the next level I plan to book my profit is 5 pips below the support zone 4 or zone 5, which is a critical level, on most occasions. Of course, if you feel, we can also plan to book. All these levels are used to book your profit. That means, I can plan to book about 157 plus minus 5 pips. This is where, you remember, our intention is not to lose money. Our intention is to control the risk, and also our intention is to make the maximum price target or the maximum opportunity, right? So these are the key points that to be taken note being a day trader. Now, what I'm going to do is I'm going to now go to the chart. Then I'm going to tell you how we can, or you can see for yourself, how the market responded to these levels and how we can plan our trade based on this, right? So the price target can be, depending on what kind of trader you call yourself. I plan to book my profit at 157.50 or 157.80 or max 158.10. Remember, 158.15 is a critical level, So that means I'm not being very, that means I'm not expecting the price to go beyond that level. So anywhere around this level, then I would want to book my profit, right? Now let's look at the chart and see how we can trade, or how we can look. Okay, I hope I'm not going very fast. Let me change my screen. Okay. Okay, let me show you the pound, all right? Okay, this is the scenario right now. Okay, let me highlight to you. Okay, let me pull that figure. Today is 7. Okay, let me highlight to you those levels which I mentioned earlier on, all right? And then you can look for 156. Okay, let me change to a 15-minute chart, right? Okay, 156.95. Quickly, you know. This is something, it takes some time. Okay, just bear with me, you know. See, the reason why I like to do this is, you know, when I plot these levels, you know, it would be very easy for me to see. Just give me 1 minute. I hope I'm not being very fast, you know. Okay. Okay, let me highlight to you this 156.95. Yeah. So why the thing is not okay? 156.95. 157.20. Okay, 157.85. And I have 157.55, right? These are my price target levels. And my entry level is 156.30, right? And I have, 156.25, right? 156.25, I have one more level. And 156 figure, right? These are my entry level. So basically, of course, you look at a 2-hour chart. This is the chart it looks like. Okay? Maybe what I can show you is, probably I can show you 1 minute chart. All right? Is there any other figures I left out? Let me see. Previous month low, which is 156.75, right? This is a level which I mentioned earlier on. Okay, 156.75 is the previous month low. Okay, let me see any other. 156.95 is also a critical level because, you know, it's a weekly open, right? So 156.95, I have to tell myself or register myself to say that, okay, this is the weekly open, right? So when let's say I look at on the 1 minute chart, remember I said, you know, whenever the market moves into the no man's zone area, which is 156.95 and 156.25, right? The market is very choppy, right? So if you notice, Steve, this is where 156.25 and this is where 156.95, and in fact today this is the open, right? And the market is choppy around this zone, right? And the market, remember, I said, you know, if I'm going to be a breakout trade, you know, this is what I meant by a second time break. Usually, most of the time, when you see the market testing our levels or zones, you see a consolidation taking place, or the market have some pullback. You know, this is the typical behavior. You know, remember, you know, you see this 156.75, it tested. Then we have a consolidation taking place of roughly how long is this? Let me see. 2:45. Yeah, about 2 hours. You know, then it moved to our zone one level, resistance zone 1, then it had a pullback, then it was trading for another 2 hours, then the breakout happens, the market began to shoot out, and right now it's trading at this level, which is the support level, so we have to see whether we can trade this. Now, how do I decide? Okay, early on, if I look at the system, I trade on this system, based on the system, I would have entered a breakout trade around this level, I would have exited by now. If let's say I missed this entry, okay, let's say I want to re-enter again. Okay, remember, the BOE rate announcement is happening in another 1.5 hours time. So, of course, I have to wait and see. I do not want to fight for the news, because the market can reverse, the entire, and remember, the trend is still down. The daily trend is still down. The hourly is also sideways. So, the market is still expected to come down. So we have to be very careful, in our entry, exit, and stop loss level. In fact, our entry was, in fact, we created a signal, this morning on this pound kiwi, which I think we missed that entry, and our price target also, we missed it. But this is how the market behaves, and this is how the market moves, right? And if, let's say, I want to trade again, let me ask you a question. Okay, now more or less I have identified these levels, I've identified the zones. Now, if I'm going to trade, how would I want to trade? Okay, maybe I can have some volunteer, to see. How would I want to trade based on this, and based on these levels or zones, and I would want to have the least risk with the most rewarding, right? How many of you, want to be a buyer, first of all, having that in mind? Okay, let me pull the report again. Not this one. Yeah. So looking at this, how many of you think, I still want to trade this? You see, the market has started to move, right? Now, we can be still trading. I'm not saying no. Remember, being a day trader, we look for opportunities, right? And we should be looking to trade. So, how would I want to trade this based on the levels or zones? And I can still be, maybe, before the news, if you think you want to fight for the news, of course, it's a risky, but we can still trade with the least risk. Remember, we have to decide. See, the tricky part is, we have to look for the least risk with the most rewarding. And being a technical trader, remember always that, when the resistance breaks, it becomes support. When the support breaks, it becomes resistance, right? So, based on that theory, what I want to do, is when the market comes back to 156.95, okay, how would I want to trade is, I would want to go for a long near this level, right? I want to put my stop below this, in fact, today's low, which is 156.45, which means that now I'm taking a risk of about 50 pips. But I would want to exit before the high, if I'm going to be a conservative trader, because, the market broke the resistance, and what I'm going to do is, I'm going to, test and, when the market tests the resistance, I want to have a re-entry, and this is where I would want to put, that means I want to go for a long at 156.95, I want to put my stop below this, which I'm taking a 50 pips risk, and I would want exit before this zone, which gives me a risk-reward ratio of 1:1. Probably you may want to try it out on a demo account, to see whether this trade, works out and do. The good and bad about this system is, trust me, it gives you a very good entry, it gives you a very good stop loss, and it gives you a very good exit point, and it prevents me from having emotions, because I'm going to decide, predetermine my entry, exit, and stop loss. So I know very well that, this is my risk, and this is going to be my reward, and this is going to be my returns. So, that's the biggest. And of course, the bad thing is about this is, sometimes you tend to miss your entry points, especially, if you're being very precise on our entry, sometimes we tend to miss the entry point, maybe I can show you. In fact, today we created a signal, a live signal based on this, and I think we missed, the entry. Yeah, in fact, this trade was missed, by a few pips, and I think the trade was missed. In fact, we also took on the swing trading, which I think the trade is still on. We did manage to get this entry, and we are planning to exit. So later on, we would try to exit at a better entry points, right? So sometimes what happens is, we tend to miss the opportunity. That is a bad thing about this system. Because and I think there's nothing much we can do on that, especially we are being a day traders. I think we have to be precise on our entry, exit, and stop loss. So that's nothing can be done. Especially if we want to trade without emotions, right? Okay. The question is our view on New Zealand dollars. Okay, let me show you the chart. Okay, in fact, I think we created a view on New Zealand dollars today. In fact, this is our pick for the day. In fact, we picked New Zealand dollars, in fact, as the best cross to be traded, but in fact, it did not move at all right? So, but I think this view is still valid because, the view can happen maybe after the US session comes in. The view is still supported. So New Zealand is supported by the oscillators, the high-low time, and the PT signals, and we have no price target because it's got in a range. So we are expecting the move, and we should be able to see 83.30 or 82.80 levels, provided the registered high is not breached for today. That means as long as that the price doesn't go above 84.05, our view still remains, and we are still bearish on this cross, and that's the reason why we pick pound kiwi as the best cross, and in fact pound yen, which did not move, and pound sing also. I think we are still in the trade, I still we do, and euro kiwi also it moved. Let me see, the euro kiwi it moved about 110 pips, since the morning, which is also a good pick, So, and pound kiwi, just now it went to, in fact, about 180 pips, so which was a good pick. So now, coming back to your question. Okay, if I look at this, let's say I look at this chart, okay, I still feel the market is still going to test the lows. In fact, we are still sticking to our view as long as the price doesn't break this level. If the price breaks this level, 84.05, then I think we are wrong on this. Then we may want to change this view. As long as the price doesn't go above this, we still want to maintain our view, saying that the market may reach 83.30 or 82.80 level by today. So you can go and test it out, and you can see whether this thing happens, right? Okay, how about the others? Saying no sound. I hope the others can hear me, right? Hello. Hello. Can you hear me? Can you hear me now? I'm not seeing. Okay. Hope. Okay. Thank you. Because I'm not seeing this. I think I'm having. Okay. Can you hear me now? Okay. Can you hear me now? I'm not seeing. Okay. Hope. Okay. Thank you. Because I'm not seeing this. I think I'm having. Okay. Can you hear me now? Okay. Thank you. Because I'm not seeing this. I think I'm having. Okay. Can you hear me now? Okay. Can you hear me now? Okay. Thank you. Because I'm not seeing this. I think I'm having. Right. As long as you can hear me, that's fine. So, what we are trying to tell you is, we have to have a view, then we have to have our system, and you can trade the system, with ease, meaning in the sense, okay, we have a view, we have a system, then you just follow the system. If the system says, you have to go for a buy, then you go for a buy. If the system says go for a sell, then probably you can go. For the pound, what I would want to do, okay, as far as this is concerned, there's two ways which I can trade this. One is to go for a buy at near 156.95. If I see this with a stop below this and exit before 157.55, this is one trade setup which I see. The next setup is if I see the price moving beyond this level, then probably I may want to short, because the bigger time frame is still telling me that the trend should come down eventually, right? So these are the two trade setup which I'm looking on this cross, and I'll just key the levels, with the stop loss, exit, and then I'll see this the trade setup to work out for me. Okay, similar views for Aussie as the Kiwi. In fact, for Aussie, let me see for Aussie. Let me show you let me pull the report. In fact, see the good thing is, whatever the report tells me, that's what I would want to follow. Because the reason why I do that is, I do not want to get myself caught in emotional, whether the greed or fear to come in. So if I look at Aussie, the Aussie is also sideways, right? And still, is still pointing down. So I'll be looking for a short, Maybe my entry levels are, at resistance zone 1, which is 103.50 and 103.70, 102.90 and 102.70. And also remember that our report is published twice a day. This is Asian and Europe session. You should be able to get another update after the what do you call this, after this webinar, right? So you should be able to get a similar view, the report, then you can update on the levels, right? So for Aussie, the entry points are 103.50, 103.70, 102.90 and 102.70, right? Okay, for Kiwi, let me see. For Kiwi, you see, unlike Aussie, Kiwi we have sideways down. Okay, basically, we feel the market is going to go down, so that's one of the reasons why we want to short this market. At the resistance zone 2, zone 1 and zone 2 are 84.20 and 84.40, and the downside is 83.70 and 83.50. Okay, in fact, 83.50 is a critical level. Remember I said, the day low would usually happen on the support zone 2. Let me see what is the day low today. In fact, the day low today is 83.51. So the market is caught, on a critical level. So the market has to break this level for us to see a lower lows and lower highs. Otherwise, we have to be very careful, because 83.50 is a critical level. And the registered day low is within that level, so we have to be careful on this market. So this is how we do, right? Any other questions or any other queries you want to ask, about the system or the zones which I shared with you? I can show because I think we're running out of time. Any questions? Let me see. Okay, the question is PT signals. I don't know what was the question. You just put as penny signals. I don't know what was the question. Pound on the 4-hour chart. Okay, basically on the 4-hour chart. Okay, if you look at pound. Okay, let me show you that. This is a pound. Yeah, 4-hour chart. Okay, the 4-hour chart is telling me, we are getting a breakout, but again, we would not know whether this is a genuine break or whether this is a false break. We would not know until this 4-hour chart closes. If we close the market, below this level, we have a pullback, then it can be a false break. Then we can expect the market to fall further. Right? So this is we have to wait for the market to give us an answer. Okay, the question is, what is the criteria you use to select the best cross to trade? Okay, of course, we have, in fact, show you, let me show you that. See, we have the best cross here, indicated here. And of course, I can choose on different time, where is the best cross to trade. Like, for example, if I use a 6-hour chart, then, this is the best cross to trade within this time. If I use a 12-hour, then, again, this is the best cross to trade. So again, for the day, this is the time, so it helps me to choose, right? Okay, and I think we are getting time, So the system, helps me to decide, right, which would be the best cross to trade, on the time which we are having our focus, so that it would be trading. It would help me to decide, to trade with ease, right? Okay, I think it's more or less timing is getting time up, right? Once again, I take this opportunity to thank FX Street for organizing this wonderful event, and I also want to thank you for coming into this room, and looking forward to see you again for the next session. Till then, have a great weekend, and have a great week, and also remember, always, when you trade, please, predetermine,